Greg Bonnell is the host of Money Talk Live, and he was taking all sorts of questions today with his guest, Andrew Kelvin, talking about the Bank of Canada holding at 5%. It was big news, even though they didn't move.
Well, the big news is the fact that they've stopped, right?
Yeah.
Because they were on the sidelines earlier this year, and then they came back and started hiking again through the summer. So you get a hold at 5%. That is their trend-setting rate right now. But they said they're ready to hike again if they need to tame inflation. A little bit concerned about some underlying currents there. Now, TD Securities believes the Bank of Canada is done hiking. They think 5%, this is the top for the cycle. And Andrew Kelvin from TD Securities, head of Canadian and global rates there, said the BOC also in today's message trying to send a message that rate cuts aren't coming anytime soon.
The thing the Bank of Canada want to avoid here is sending a signal to markets that they are going to quickly turn around and cut rates, because that is not their thought process currently. The hawkish hold is designed to achieve a few goals. First off, they want to make sure inflation expectations remain well anchored. So they want to reiterate that they're committed to bringing inflation back to 2%. Inflation, of course, is not currently at 2%. It's running above 3%. So it follows that if their target's 2 and inflation's above 3, they can't be happy with the state of the world as it is. So they talk about how there's still lagged impacts of monetary policy and how we are now seeing signs of excess demand easing, of growth slowing. So there's signs that monetary policy is working. They expect it to continue to work further to keep growth on the slow side, to bring inflation lower, and that's why they believe they can stay on hold here. But if it turns out that these lagged impacts of rate hikes, if it turns out that the tightening already in place isn't enough to bring inflation back to 2%, like their mandate requires them to attempt to do more, and that's just the message they're trying to send here. I don't think it should be a surprise. It would always be hugely premature for the bank to declare victory with inflation running above 3% across a variety of metrics. But I think in terms of acknowledging that the growth has been a little bit weaker in the second quarter, that does show that they're not gung-ho on lifting rates, damn the torpedo sort of thing.
Now, of course, at 5%, even if this is where we end up, it's still been a very aggressive year and a half of rate hikes. Anna Castro was on the program the other day, Managing Director, Head of Retail Asset Allocation at TD Asset Management. People looking for yield, they might be thinking about the bond market, but they're also asking about GIC. She breaks it down for us.
What you have as an opportunity right now is a higher level of income that is possible from high quality, both government and corporate bonds. And this is important because you are able to lock that high level of income from a high interest rate environment, benefiting from that right now, and lock that for a particular period, let's say 5 years. And if your view is that while interest rates will remain elevated, but in about a year or so, they would be trending lower because central bank action. That means a GIC will have a refinancing risk. When you get your money from a GIC or any cash right now, you'd have to think about when that matures, what level of interest rate would you have to invest that in to sustain that moving forward? Right now, you have an opportunity to have high quality corporations and governments, as I mentioned, paying this mid-single digits to a little bit of a low single digit type of coupon that you could benefit from and lock that for a certain number of years moving forward.
So a lot of great guests so far this week, and even more great guests on schedule for next week.
And that's where you find them. Greg, thank you very much. All the guests coming up on Money Talk Live on Webroker. Thank you for watching, and we hope to see you again next week.
The preceding paid commercial program was brought to you by TD Well.